What's up, everybody? Welcome back to Sales Remastered. In this episode, I'm going to tell you how to sell a higher interest rate. So as loan officers, we're always faced with that dreaded question, what's your rate? Well, I was quoted this rate by a broker, and this other lender down the street from me has this interest rate. Can you beat them? You know, I heard a radio advertisement, but they didn't hear the disclosure that said that you could give me X pricing, and I want to make sure that I get that today. I don't want to pay no costs. I don't want to answer your questions. Just let me know, can you do it in 14 days or not? You know, these are just the outlandish requests that we always get. And so I'm going to share with you how to sell a higher interest rate. Now, at the very beginning of any sales conversation, you know, you have the option to dive right into pricing and start, you know, aggressively negotiating price at the very beginning, but you may be missing out on some key factors that is going to help you sell the pricing. Keep in mind that when a prospect asks you for a lower rate, what they really are saying is that they just want a lower payment. And now it is our job to find out what their intent is with the savings from that lower payment. Now, here's the thing is that when you go through your conversation, they might make outlandish requests like, Daniel, I'll only say yes if it's a 2.99, or I'll only say yes if it's a 3.25. Whatever they say, you have to learn how to deflect that, but keep the direction moving forward. Don't feel the temptation to jump into negotiation. You're not going to do yourself any good if you start selling the loan or start selling interest rates or pricing at the very beginning before you know what pillars that they use to hold up the reason why they're even going to buy from you to begin with. And so their pillars, what I'm talking about, it's kind of like the whole thing that's framing up their whole intent to buy. And you're not going to understand what their whole intent is to buy whatever product or service or program or interest rate or fees that you're selling unless you understand what these pillars are. And so the pillars are, for example, if they say want a lower rate, well, the reason why they want a lower rate is because they need monthly savings. So that becomes a pillar. Now the monthly savings is going to lead to something, and it's our job to find out, well, what's your intent to use that monthly savings? And then they're going to tell you what the other pillar is. Well, my intent to use that monthly savings is so that I can pay off credit card debt. And now you found another pillar, right? Okay, well, with the monthly credit card debt, how much are you spending now on this credit card debt? And so they're going to tell you from that pillar to another pillar and say, well, I'm spending about $500 per month. Now it's all coming together, but you wouldn't understand all these intents or what their true desires were if you would have immediately started jumping into negotiating rate and fees. It's not the rate or fee that you should be worried about. It's whether or not you can extract the right information in the conversation so you can identify what these pillars are for your prospect. And so when they tell you that they need extra savings to help pay their credit cards off because it's currently eating $500 of their monthly budget right now, you can now create the fourth pillar and say, currently right now, Mr. Jones, after all your bills are paid, after the $500 in credit card debt, after all your expenses, your utilities, your car, your gas, after everything's paid, Mr. Jones, how much of your net income do you have left? They're going to tell you, oh, I've got $300, $200. And when they tell you that, say, Mr. Jones, of that $200 or $300 that you save per month, how much of that is going in the bank? And they're going to tell you, oh, I probably got $50. And so what this is telling you is that Mr. Jones is looking more for just a lower rate. He's looking for a way to live and way to survive. And that is what we need to focus on. But we can't find out these pillars if we choose to start selling rate and fees at the very beginning of the conversation. So you'll notice that on your sales floor, most of the loan officers who do succeed are those who take efficient loan applications. I just released a video on how to efficiently take and conduct a 1003 conversation. So be sure you peep that out. I'll leave a link below in this video so it's easy to find. But keep that in mind. So the question is, how do I sell rate and fees? So in this example, Mr. Jones said, I want a lower rate. And Mr. Jones could have said some just insane interest rate that is not available in the market. Let's just say 3.25, 30-year fixed. This was his immediate request, right? And this is what we hear a lot. We hear this often. But the truth of the matter is that Mr. Jones is not just interested in a lower interest rate. The 3.25 that comes out of his mouth is because that's the advertisement he remembers seeing. And so he's just going to say 3.25. But as loan officers, we need to change the way we hear this. Instead of thinking he wants a lower rate, we need to understand he just needs a lower payment. And so Mr. Jones shares with us, what would he do with the monthly savings? The monthly savings would go towards credit card debt. And so now I need to figure out how much in monthly savings does he need, in which we did because we found out how much total credit card debt he has. So he already said he spends $500 a month just on credit card debt. Now, of course, we're going to find out that this is probably a good, let's say, $25K in credit card debt. Mr. Jones is ultimately looking for help to pay this $500 in credit card debt. He's not necessarily looking for 3 1/4. He just needs an answer, a solution to the $500 in credit card debt. Now, Mr. Jones' current payment, his payment now on the mortgage, and I'll give a realistic example. So let's say his current payment on the mortgage is $2,500, PITI, however you want to take it. And after the refinance, he's looking for a payment of $3,000. Oh, I'm sorry, $2,000. Ultimately, right? So he's looking for $500 in payment savings to offset the credit card debt. Now, in this refinance, if we did not try and sell Mr. Jones on rate and fees at the very beginning of the conversation, we could then ask more questions and figure out what these other pillars are. And so now we need to know what our pillars are. Does Mr. Jones even have the income? Does he even have the capacity, the equity? Does he have the right credit? Right? Is there any clouds on title, things that are going to interfere with our ability to pay off his current mortgage and possibly to pay off the credit card debt? So even though he's asking for 3 1/4, you and I now know that he's really just looking for a solution for the $500 in debt. So figuratively, he's trying to drop this payment from $2,500 down to $2,000. Mr. Jones is not like us. He doesn't understand mortgage like you and I. So he figures the only way I can drop my payment down to $2,000 is if I drop my interest rate. And so I need a lower interest rate. And this is why Mr. Jones is asking for the lower interest rate. But little did Mr. Jones know that we can offer a cash out refinance and possibly pay off all this credit card debt. Even though it's not 3 1/4, and let's just say it's 4 1/4, it really depends on how we go over that with Mr. Jones, right? Mr. Jones asked for 3 1/4. How am I going to sell this guy on 4 1/4? This is how. At the very beginning, when he mentioned that he wants 3 1/4, when you find out that he just ultimately wants a solution for the $500 in credit card debt, we can offer him cash out to pay off $25,000 in credit card debt. This would ultimately pay or remove $500 in liabilities from Mr. Jones. Now, because I know he pays $2,500 on his mortgage now, I know if I combine these two with the payment deferral that all of our clients receive on a refinance, they get to skip a payment. I know that I've already accounted for $3,000 cash flow. Typically, that might account for all of your closing costs, so if you need help in selling closing costs, there's an alternative option for you. But here's the thing is that when we sell higher rate and when we sell higher fees than what our prospects are looking for, we have to really press on the solution, right? And kind of shift their focus away on pricing and costs and really just look about the solution. Look how positive of a change we're giving to our prospect's budget. Right now, so now if I'm able to save you $500, Mr. Jones, isn't that great? But the problem is though, is that when we add this $25,000 to his mortgage, this payment is probably not going to change too much. If anything, it might even go up. And so now he's just going to be looking at this payment. And the issue is how we get Mr. Jones to say, hey, this is not your payment though. You have to keep in mind that you're paying currently right now $3,000. I'm dropping this total $3,000 payment, and let's just say I'm taking it to $2,750, right? And this is at the pitch time. So reality is, I'll even make it even more challenging for you, is $2,800, right? And that's with the $25,000 cash, that's with all of our fees, escrow and all that good stuff. And so everything comes out to $2,800. So Mr. Jones is now saying, well, Daniel, you know, I was coming in to drop my payment to $2,000. You're telling me you're selling me $2,800. No, Mr. Jones, right now you're currently paying $3,000. So I'm going to drop that total payment to $2,800, and I'm going to save you $200 a month. You no longer have this $500 in payment. Now the challenge is, how do I get Mr. Jones to get over this $2,800 payment? Because he's used to sending $2,500 to the mortgage company. He's not used to sending $2,800. Even if Mr. Jones doesn't understand that he's not sending $500 anymore to his credit card companies, and even if he doesn't understand that there's a $200 a monthly savings, what Mr. Jones does know and will understand is that this is all just a stepping stone. And so now what I do is I look at how this credit card debt may have affected Mr. Jones right now. And so I'm going to find out that because he's been juggling all this debt, that $500 really ate away into his savings. You know, Mr. Jones has kids. Mr. Jones has a stay-home mom or stay-home wife. And Mr. Jones also needs to buy all these other things and these other random events that he has to conduct for his family, whether it's vacations or whether it's, you know, braces or a new car, or their current car broke down and so they needed a new ride or they needed a new fix. There's just these other things that we don't expect that comes in and could have eaten everything alive. This is probably where most of the credit card debt has come from to begin with. And so when people have this much credit card debt, they don't necessarily have as much money in savings. And so really now that's where our focus is that, well, Mr. Jones, this $25,000 in credit card debt really ate into your savings. You had mentioned to me in our initial conversation that you don't really have much left at the end of the month. As a matter of fact, if I remember correctly, you said you only have $50 left at the end of the month. This is very riskful considering that you're responsible for a stay-home wife and also your kids. This is also very riskful because if for whatever reason you didn't make a payment or you had another emergency, you only have $100 in your bank to cover a total of $3,000 in debt. And that doesn't even include your expenses or your utilities or the braces for little Julie. You know, you have to now shift the focus. On top of that, Mr. Jones, this $25,000 in credit card debt did a number on your credit score. It actually weighed you down a little bit. And so after we pay off this credit card debt and after I create $3,000 of immediate cash flow, plus your escrow balance of, let's say, another $2,000, I just turned your bank account balance from $50 to $5,000 of immediate cash flow. Now, if you're asking me, Mr. Jones, is it worth doing it? Absolutely, only because I've seen so many people go down your path and choose to stay in that path. And then they'll call me 6 months later when the market increases and it's always just too late. But don't have to endure all the pain and the frustration and the emotional tie to this juggling of all this debt. I have a solution for you. Here's the upside. After we do all this debt consolidation and I free up this $5,000, I'm going to increase your FICO score. In the next 6 to 12 months, we'll go ahead and look at your options again. At that time, you should have X amount of money in the bank, you should have an X amount FICO score, and you should be able to consider other options to shorten the term versus having 29 years left or 30 years left on a mortgage. I'm going to show you how to rehabilitate your credit score and your budget and your assets so that when we talk again in 6 to 12 months, we'll go ahead and look for that 3.25 then. And that is how you sell a higher rate in fees. Leave your comments below. I'd really like to know your input. Let me know what your takeaway was in this sales conversation or this example. Let me know if you're currently using these strategies. A common missed strategy that I never really hear, but I know is always being missed, is the payment deferral and escrow refund. That can do very powerful things for you at the end of a pitch because homeowners, they're just not expecting that they're going to come across this influx of cash. And so you can use this $3,000 and $2,000 escrow refund as means to pay for the holidays, right? Like, hey, you know, this could pay for everything that you bought at Christmas. It could offset whatever costs that they're incurring or use that to pay the cost of the refinance. In exchange, they'll be able to pay off all this credit card debt, remove a lot of the weight that's on their shoulders right now, and you look like the savior. More importantly, you just set yourself up for another refinance business in the future. So you're going to be able to rewrite that loan program in no time. So if you have any questions, please leave your comments below. I'd love to know your feedback. And if this is your first time watching Sales Remastered, consider subscribing, hit the bell, and make sure you get that notification of any updated live content that's coming and will be available, and also any topics that I do release on a daily basis. You'll be able to get first notification so that you can identify whether or not it's going to help you at that given day or with that given task. I appreciate your time in watching the channel. I see your support and I humbly appreciate you for watching. I'll see you on the next video.